Hey guys, what's going on? Welcome to the Profitable Traders. If you've been watching most of my previous videos, you must have seen me switching from a higher time frame to a lower time frame. That's called multi-time frame trading. In this video, I'll show you the two main reasons why multi-time frame trading is important and how to use multi-time frame to profit in the Forex market. Before we dive in, if you're new to this channel or you haven't yet subscribed, don't hesitate to hit that subscribe button and the notifications bell so that you don't miss any of my future uploads. Coming up. Multi-time frame is when you switch from a higher time frame to a lower time frame when making technical analysis. There are two main reasons why I consider multi-time frame trading to be so important. The first reason, dynamic levels of structure tend to be more powerful on higher time frames. The second reason, a small move on a higher time frame is a big move on a lower time frame, and this is so helpful for counter trend traders. Let me show you examples on the charts. The first example is on dollar Canadian, and on dollar Canadian I'll put a vertical line on this mark so that it will guide us when we go to a lower time frame later. And here is our dynamic level of structure that was tested multiple times, and here is our vertical line. We are on a daily time frame. Now let's drop on a lower time frame, like 4-hour time frame, and we'll see what happens. On a lower time frame, here we are. We identified our dynamic level of structure on a daily time frame, then we dropped on a lower time frame, and this was our vertical line that we drew on a daily time frame. Now this daily level of structure, which is a resistance level, tends to be powerful and therefore respected on a lower time frame. And here we have our move to the downside, came back up again to this level of structure, it got pushed down, it came back again, tested it for the third time, got pushed down, and it came back up here, it got pushed down, and as you see, this level of structure was respected on a lower time frame, and here was a false breakout before it pushed down. The second reason is that these moves on a daily time frame are small moves, but on a lower time frame like 4-hour time frame, the big moves where you can make profits. As we continue with this daily dynamic level of structure on 4-hour time frame, we see a big push down. As we go, we see another push down. And as we continue, we see another push down. And now it broke above this level of structure. This level has become more powerful because it has now acted as support and resistance. We have a break above this level and a pullback to it. Now I'll consider this level of structure to be more powerful because it's now acting as support. When it retraces back, we have a push up of this market up to here, and as that happens, I'm waiting again for this market to come back to this same level of structure and see what happens to it. It comes back to the same level of structure, got pushed up On a daily time frame, this move might be so small, but on 4-hour time frame, it's a big move. That's about 300 pips. Again, I'm looking at this market to come back and touch this level of structure, and I find a reason to either go up or go down depending on the reason that I find. In this case, this move is a small move on a daily time frame, but you could make the use of it on a lower time frame like 4-hour time frame, and this is about 100 pips. Now we're at the current price, and what I will do with this same market is to wait for this market to touch this level of structure and find a reason to go down, or if it goes up above this level of structure, I'll wait for it to come down and find a reason to go up. That's an example of dollar Canadian with only one dynamic level of structure. Let's look at another example, Aussie dollar. And with Aussie dollar, I'll just go with this example where I already drew my dynamic level of structure on a daily time frame. This green zone, this is a level of structure that was tested here as support, and slightly here as resistance. So this level of structure, let me put my vertical line here, and let's see what happens on a lower time frame. Let's go to 4-hour time frame. Let me scroll back and see what happens here. Yeah, here we are. Now we have this market came back to this dynamic level of structure. It got respected because dynamic levels of structure on a higher time frame are more powerful. So it came here, this structure, and got respected. Again, touched this same structure and got respected. And it failed to come back here. When it came to this level of structure, it had a false breakout and broke below this level of structure. In this case, you have to wait for the market to touch this level of structure and find your reason to continue to the downside. And again, these moves that you see here on 4-hour time frame are small moves on a daily time frame. And this is an example where a counter trend would work best. As this market came up, you could place your counter trend trade based on your strategy, and you could catch about 100 pips. This market continued down here, and let's see what happens when this market comes back to this daily dynamic level of structure. Let's see, it hasn't yet come up, and here we are. It almost got up here and had a push down, and this push down on a daily time frame is a small move, but on 4-hour time frame it's a big move of about 100 pips. Let me see, yeah, more than 100 pips. We had a false breakout here, and this market came back below this daily level of structure and broke above it. This could be your counter trend to the downside. And here the market came back to this level and respected it, went to the upside, and again it came back here, went to the upside. This move on a much lower time frame is a big move, and it could be around 60 pips. 60 pips on 1 hour time frame. That's enough. And as we see, when it broke below this level, we got a push down of about 80 pips. And I used the same level of structure on 27th of July to profit this move on this dynamic level of structure. And here could be your counter trend, about 68 pips. Since this market has broken above this level of structure, I'll be looking for this market to come back here and find a reason to go up. Or if it breaks below this level of structure, I'll wait for it to come back up here and look for the reason to continue to the downside. And these are the two reasons I want to share with you why multi-time frame trading is more important. The first reason is dynamic levels of structure tend to be more powerful on a higher time frame. Second is that small moves on a higher time frame are a big move on a lower time frame. I have a bonus for you. RSI is more accurate on higher time frames than on lower time frames. On a lower time frame, RSI is so volatile, but on a higher time frame, you can see this RSI being oversold here, and the market goes to the upside, being overbought here, and the market goes to the downside, being overbought here, and the market pushes down, being overbought here now, and I'm looking for this market to make a push down to this level of structure before I could go. These overbought and oversold conditions of RSI alone cannot make you profits in the forex market. You have to combine it with other factors which can make this RSI strategy more powerful on a higher time frame. If you have enjoyed this video, would you give it a thumbs up and hit that subscribe button, the notifications bell. Thank you guys for watching. See you in the next video.